Hello, everyone, and welcome back to episode 12 of WAGME TV. I'm joined, as always, by the absolute legends. First and foremost, the Doctor, Doc Mata, the All-American, Evan Smith.
How we doing?
And last but not least, the NFT Lord himself, Alex Garcia. So, pretty eventful week. I know we covered Luna last week, and, we'll have some more updates on that to come. But one of the interesting things that, I had read this week is actually Andreessen Horowitz put out their, can you guys see this?
Yeah.
2022 State of Crypto report. And I thought this was really interesting, and it actually hits on a lot of things that kind of we've discussed within our podcast over the last few months. And, I felt like it was kind of like an interesting time, with prices down a little bit, sentiment down a little bit, to try to just kind of go through this. And it kind of lets you zoom out and kind of see where we are, right? And, a lot of the themes actually matched up with things that we've discussed, which, made me feel good about kind of our analysis and our general conversations and stuff. But, I thought this graph actually was really interesting. And, everyone gets all up in arms when, Bitcoin price goes down, everything's crashing. But in reality, they kind of talk about it as like a price innovation cycle. And I thought this, graphic was really interesting. Would be cool to get your guys' opinion. But essentially, like, basically a rapid increase in price fuels a lot of interest within crypto. And like a lot of people kind of start, looking in crypto for the first time, and like just generally spurring a lot of interest and that leads to a lot of new ideas, and that leads to building. And, then the price kind of comes back down and there's kind of a lull. But the key there is, the solid projects, solid developers continue on building. And that's kind of what drives the crypto space forward. And it seems like we're kind of approaching one of those cycles. What do you guys kind of think about that? Would you agree?
Yeah, I mean, I think that's pretty much spot on, right? I think there's just a lot of interest when things are going up and people are hopping in and people are starting to learn more about it. Then you have these projects pop up, for better or for worse, right? Some of them are your rug pulls or things like that. And then others are some solid projects that come out of it, right? Those solid projects, like you mentioned, are going to be the ones that can weather this bear market as we make it through however many months it's going to take us. But it's kind of like a clearing of the pipes, if you will. Like, it kind of, everything just gets all conglomerated in there and everything gets stuck. And at some point needs to come down so that we can clear some of those, some of those projects out that maybe weren't as legitimate as we thought. So
yeah, cut the dead weight.
Yeah, exactly.
Yeah. And I think you can look back, and even outside of crypto, you look back at the recession that happened right when the Web 2 wave was coming out, and some of the best companies, most resilient companies that we have now are being created in these downturns. And I think that's going to be true, for this downturn that we have. Is, it's a great time to build, and you're going to find a lot of people that are getting lean, that are really finding ways to make their investment dollars go further, create stickier relationships with their customers. And, like Andreessen Horowitz, that's what they invest in. They see it, we see it just watching the crypto space. And yeah, I think they're right on point with this.
Yeah, that's definitely a good point you make about stretching the dollar further, because now during the bear market, especially since there's going to be less overall, at least I would assume less overall, like VC and institutional investment in these types of projects, because money is getting more expensive to borrow, obviously, because of the interest rate hike. So like they're going to be allocating potentially less money towards this, but at the same time, maybe less projects and not over like a large swath of them. So it's going to be, you have to have really, really good technology, like you guys said, to survive through the bear, to attract that money, even though this interest isn't here from, the larger price increase.
Mm-hmm. No, I completely agree. And it's going to be interesting, like, one of the pieces that as investors you might want to look for now in a project is like, okay, how much runway do these guys really have? Like, it's easy to be, I feel like a lot of projects are really gung-ho and really positive when times are good, but like which are the ones that, you know, are going to be the resilient ones, which are going to be the ones that kind of survive the downturn when, you know, everything's not going great, and, you know, things like that. So just more nuanced things to kind of look at when looking at potential investments for sure. You know, they kind of go through 5 different things. I think this is one that we've touched on in previous episodes too, in that, you know, Web3 is just so much better for creators than Web2. I know we discussed, you know, artists and, you know, being able to, you know, take more from, basically avoid the royalties and stuff that like you kind of get wrecked with, you know, for traditional Web2 companies. You know, Armada, you were big into the, I think it was called Audius, that you know, music platform.
Right.
Yeah. So that's for sure going to be something that I think remains a huge advantage in Web3. What do you guys think in terms of things to watch here? Within kind of the artist space, do you guys have particular areas that you're going to be, you know, looking at specifically?
Yeah, I mean, I think you bring up a project that we've looked into a little bit, Audius. Like that's something where it's an industry, the music industry is terrible about getting money back to the actual creators, you know, the beat makers, the actual artists that are creating this music. There's a lot of hands in the pie there. And that's something that this is going to be able to hopefully fix. I don't know if Audius is the right solution for it. I think they've had some mistakes on their behalf as well. But yeah, I think the biggest thing that you see is ownership, like having full ownership of your artwork, of your projects. Like that's where one, like the credit comes in and you're able to build your own brand, but also the money follows that. And that's the biggest thing for artists, is being able to be compensated for the work they do. So totally agree with that. Like it's all about ownership with this.
On the flip side, like sports as well, right? I haven't, I mean, I know like Tom Brady is like super into, you know, kind of doing it. He has his own NFT company and things like that. But I think athletes are going to get like pretty involved in this space as well. If you think about like, you know, artists, like a musician like creates their, you know, art in the form of like a song or something. But I feel like almost athletes create their art in the form of like moments, like crazy highlights or like, you know, championships and like epic moments that like fans remember forever. So it'll be interesting. I don't know if that's going to be something, but I could see it where like athletes start releasing their own NFTs of like classic moments or like classic photos or videos or things like that. So
absolutely. No, and I think the other side of kind of the music use case is actual like live events and companies that put on live events. So like Coachella started selling NFTs that stand for like a 10-year membership, like a lifetime membership. Like they come with like all these like benefits, et cetera, and you can always resell them. So if Coachella, like if you're kind of essentially like betting on Coachella. So like if you use it up and you want to use it for a few years and then you resell it, like it kind of puts the power to the consumer. So like all of these different industries, like, you know, like you said, sports, music, like, you know, it's kind of an interesting give get between the customer and the artist.
Right. Just kind of opening up a secondary market for these experiences that's not managed and like not getting a cut taken from like a Ticketmaster or you know, one of those websites. Definitely.
Yeah, and it's I feel like it's interesting because it's something that we have talked a lot about, right? I think ownership's one that we can really latch onto and like really understand. Part of me feels like Web3 and like all the hype around it obviously pushed it up, but it felt like it was almost a little bit early. Like it's almost like a half-baked idea, it feels like, and we don't really know where that space is going. Yep. But it's great to talk about these things, right? Because it's something that we can grasp now, right? Like the gaming pieces, the ownership pieces. But I'll be really interested to see 2, 3, 5 years down the road what Web3 really does mean beyond kind of those use cases that we kind of see as most apparent right now.
Right. And I think in the last week, I've at least heard news of Instagram and Spotify adding NFT marketplaces to their platforms, or at least having it on the roadmap. So you're starting to see these areas, these, large platforms allowing creators to have the option. And so I think that's really cool, as it's bringing it from, OpenSea is a very trusted site, but bringing it into more mainstream platforms. And it'll be interesting to see how those are developed. We'll have to keep watching those as those keep growing.
Yeah, I guess that's the next thing is, are these big companies, even though they're diving into Web3, right? Or are they not necessarily going to be non-existent in 5 years, but are there going to be others that are taking over their market share and their space in society, which time will tell. But it seems to happen over time, right? You kind of get these big, massive players, and then they fall out, and others kind of take their spots. So,
Yeah,
especially with the age we're in and technology and how quick things move.
Yeah,
you never know.
Well, and Spotify's interesting because they've had such a bad history of giving back to the creators. Like they barely pay people for plays. So I don't know if they're going to have the same kind of vulturous terms to the NFT agreements with artists. So yeah, I don't know. It'll be interesting to see how these tech companies play with them.
We should do a deep dive on Audius. I think that'd be fun.
Yeah.
We'll deep dive on Audius, and we can compare it to Spotify and some of the things that they're looking to do on this roadmap. I haven't heard of this, so this is super cool. Appreciate you bringing that up, Evan.
Sweet. I mean, yeah, number 3. I mean, I think we all know this. Crypto is having a real world impact. That's for sure. Number 4, Ethereum is the clear leader, but faces competition. This kind of goes hand in hand with a lot of the segments that Armada has done on the podcast. He's done deep dives into Solana, Polygon, Avalanche, and Phantom, basically all the kind of main competitors here, except for BNB chain.
All right.
Yeah. You'll notice that Luna here is not on the list. But yeah, definitely the L1 kind of competition is going to be interesting to kind of keep an eye on as we kind of maneuver this downturn. We already saw one basically fall off, and we're going to touch more on Luna in a bit. Garcia has some updates there, but this is obviously something that we've been keeping a pulse on, but will definitely be important moving forward. So any thoughts on this? Or
I feel like it's just kind of the the main conclusions that we've drawn from Mata's segments. Ethereum, it's proof of work, and maybe that's the reason that it's so trusted compared to a lot of these proof of stakes. So we'll see in the next couple of years here, with the amount of building that's going to happen, if proof of stake can hold its own in this space and overtake Ethereum, or if Ethereum's just that L1 that almost kind of enterprise layer level of security that's needed for the Web3 world to work. So
yeah, it's kind of that trifecta that we always talk about, right? Like speed, what is it again? It's speed, security, and
centralization.
The trilemma.
Yeah.
We probably butchered that one.
Security,
I think so.
decentralization, and speed. Yeah, you got it pretty much.
Right.
Speed, security, decentralization.
Right.
But yeah, I mean, you got to give and take, and Ethereum obviously has the security piece down pretty well.
And I guess cost too, right? I guess the decentralization and the security kind of go hand in hand. Because the more decentralized it is, the more secure it is.
I'll make it a square.
But yeah. But cost as well, right? The main reason why a lot of these other chains were able to gain a lot of traction was because Ethereum gas fees were just insane. So definitely something that they need to figure out, and hopefully ETH 2.0 whenever it comes.
When's that gonna be here? 3 years?
Hopefully during this downturn.
I mean, I kind of have a theory that they're probably waiting for a little bit until they can, because I think they would like to loop that into kind of the next bull run, right? Wouldn't that just make sense? Oh, here's the bull run. Oh, Ethereum's all new and going proof of stake. oh, we're going up 100,000%. I feel like, you know, if I'm Vitalik, it's like, you know what, like, why release it now when we can wait 7 months? Or whatever.
And my question is, they've got an entire ecosystem of miners that have, you know, like been super sticky in the space, have always been there for Ethereum. You know, obviously they're making money on it, but you know, it's a sticky community. It's a close-knit community. It's tough to see them totally just screwing them over and switching from proof of stake and saying, hey, you got to be a node operator now, or, you know, whatever's the next stage for them. So I don't know. It's tough to see them making that switch, in all honesty.
Definitely. No, I agree. And then lastly, I mean, just moving on to the last point here, we've highlighted this in many of our episodes and all the projects we talk about. A lot of it has been, you know, it's a lot of speculation right now. And, you know, it kind of goes back to all the way up here, right? Interest in new ideas and a lot of speculation and stuff, but that leads to building. And so now, you know, just to round it off, we're obviously still very early. I think everyone in crypto, whenever they found it, wishes they had found it earlier and like wishes they had gotten into it earlier. But the truth is that, you know, this is an innovation that's going to be here for, it's not going anywhere. It's going to be here for a long time to come. So I think it's just a question of staying engaged, right? Because I think a ton of people, like when the hype kind of goes down, when prices go down, when everyone's not getting like rich immediately, you know, it leads to a lot of people kind of dropping off. But I feel like the key is just kind of staying the course, making sure you're still keeping up on everything. And for the listeners, we're definitely going to do that. We'll be here, same time, same place every week. You know how it goes. But yeah, I don't know if you guys have any thoughts on that, but we harp on this all the time. We're still very early in this whole game.
Yeah, it's kind of that Lindy effect, if y'all are familiar with that, where essentially just the longer it lasts and the longer it lives, something that's like non-perishable, like in technology, it's just going to keep going up. So I love invest answers. You guys know that. James is my boy. He always calls it number go up technology. So I love that one. We're still early. It hurts right now. It does, but we can stay engaged and make sure that we're here and ready to hop on the next Solana or, you know, next Luna before Luna died. We'll be good to go. So
I like the comparison of the internet, like because like Web 2, that's like kind of the biggest. It says reach 1 billion users by 2005.
And it started in 1990. That's when they like started recording it, I guess. I mean, it didn't start then, but
it's estimated that Web3 could reach 1 billion users by 2031. So that kind of puts it in perspective that we're still, you know, a decade-ish out from the early day, like the early kind of catalyst for Web2, you know, with that, like the Google era, Facebook era. But
Absolutely. Sweet. So yeah, we'll link that. They have a more detailed PowerPoint presentation. So we'll link all of that, including this website and the PowerPoint in the description below. But, you know, speaking of Luna, I feel like we got to transition that way. It's been the talk of the town the last couple of weeks. We covered it in the last episode, but I think there have been some developments since then, and Garcia has been deep in the weeds on it. So, Sia, you want to take it away?
Yeah. I'll share the kind of latest update here. Basically, Do Kwon released this revival plan. So first of all, he released a 1.0 version of the revival plan last week and then released this update. And so a lot of people were kind of hoping that he would burn the tokens and instead of airdropping and forking the Terra blockchain. So right now, the plan is to actually fork Terra and have it be Luna Classic token, which will be the new, the old like the old blockchain. And then basically the same name, Luna, on the Terra chain will be like the new chain. And then they're going to airdrop all of these classic these Luna tokens to classic stakers, Luna classic holders, residual UST holders. But the issue is they're essentially not addressing what a lot of the community wanted to do. But at the same time, if we look at where the votes are at right now, so this was opened up to a vote just 2 days ago. And so if we look at where the vote is right now, 87% of people have said yes, which is kind of interesting because I feel like the general sentiment on Twitter has been this is not a good idea. Like even CZ at Binance was saying forking doesn't give the new fork any value. So he was saying it needs to be either burned or they need to start a whole other project entirely. So he was kind of saying like this is essentially not really going to work. But right now they're in the middle of a vote to see how this is going to play out. And basically it's going to, where did that go? Now my Zoom thing is in the way.
Is this Luna holders?
And so this
voting?
would, yeah, the new, sorry to interrupt, Mata, but to clarify, the new fork would not have UST at all, right?
No. So there's going to be no
Oh.
algorithmic stablecoin. And so it's not going to have UST. It's just going to be a chain without a stablecoin. And it's he's basically identifying. So this is kind of what we were talking about before we started recording, but it's kind of screwing the people that just bought recently because it's more so favoring the people that happen to hold Terra pre-attack. So like there's a snapshot on the blockchain on the 7th of May, and then a snapshot on the 27th of May. And so if you bought it after the 27th, or if you bought it in between, if you bought it just after the 7th, you're not going to get this pre-attack bonus of like this airdrop, which is where most of the Luna is going. So 35% of that's going to these pre-attack holders. But at the same time, it's a vesting period. So a lot of people are kind of, I mean, I get why it's a vesting period, right? Because people would just sell it. So
Right.
like, but at the same time, people are like, well, I just lost a ton of money and now I need to wait for, 1 year cliff and a 2 to 4 year vesting period. But that's kind of what they're looking to do, but it didn't really seem like that's what the community wanted. So I'm kind of confused as to how they're getting so many votes for it.
I totally my Wi-Fi went off, so I apologize. Who is voting on this? That was my first question. Is this all like Luna holders that's voting on this?
Yeah, so it's Luna holders, and then I believe like validators get more votes, but I'm not entirely sure. And the other thing,
Well, this would benefit the validators, right? Because they probably had a
would.
shit ton of
Right.
pre-tank Luna. So if they have more votes, they might be skewing the votes. At the same time, like it kind of makes sense because like for like random degens that just aped in when like Luna was at like fucking 1,000th of 1 cent or something, like why should they get compensated the same as people who actually got fucked that were holding Luna from like 100 or something, right?
mm-hmm.
So it kind of
I mean,
makes sense both sides. I don't know.
I think it's an interesting one because it's like, is it viable is really the real question that you're going for at this point. Like, I don't think people aren't going to be happy and people are going to push their sentiment all over Twitter because that's how Twitter works. But it's not going to be possible to make everybody happy, right? In this situation specifically, that has just been such a huge disaster. And so it's just like, will this proposal be viable? It doesn't have to be perfect, but will it work?
Mm-hmm.
I think that's the biggest thing that people are having to ask themselves. Like, yeah, we don't love it. And even though we don't love it, we might still have to say yes to this because we need something that's going to work. And so how does this affect the builders? How does this affect the validators, right? I think those are the things that you really need to consider when you're looking at something like this. But yeah, I mean,
it's a fair point.
They're in a bad spot, right?
The thing,
So
yeah,
it's
the
like,
thing is like at the same time, like the holders and like the people, like they got screwed for sure. But at the same time, it's not like Luna doesn't owe them anything.
Yeah, it's true.
Like
they made the decision to invest in a non I mean, I guess at one point it was considered a blue chip, but now not so much anymore.
That's
But
a pure meme coin.
a lot of, I mean, a lot of other chains are using this opportunity to jump in. Like VeChain has said, we'll offer developer teams 30K, like to
Smart.
transfer over to VeChain, start using VeChain. CEO of Polygon hopped in. Like people are just, trying to basically get people to convert over, because I mean, there's some serious apps like TerraSwap, like Lido, like serious developer teams,
Definitely.
that worked on Terra.
I mean, it was legitimate. It was legit. That's why it was so crazy to see it not only fall and go down in flames, but go down in flames so damn quickly.
Yeah,
I saw the hashtag trending of like Terra is more than UST or something like that. And it's like,
we were watching it.
Trying to band together like all the devs and stuff that had built to, get behind this new this new chain or this new like fork or whatever they're doing, Ev, what were you saying?
Yeah. I was just gonna ask Sia if they've mentioned anything about what they're gonna do with Terra, because I think it's great that they're offering incentives, or I guess kind of like kickbacks almost, to the Luna holders. But that's an investment. Like if you're looking at a coin like that, like that's an investment. When you look at Terra, that's a savings account.
Oh, you're saying UST? Terra,
yeah, sorry.
UST. Yeah, UST. Okay,
UST, excuse me. Yeah. And like that's a savings account. That's like where people put their retirement money.
You're right.
And so
we were talking about, yeah.
and so I think it's awesome that they're giving some investment money back to the Luna holders. But I mean, the UST community is one that, like, in my opinion, deserves the most funds allocated.
You're actually, like, you bring up a really interesting point, because like in all the rugs that have ever happened, right? Like all like just like even like Time Wonderland, like just crazy shit, right? Like it was never promised as being safe.
Right.
It was never once. None of these rugs are ever promised as being safe. This is the one where like Anchor was actually, you're right. Like it was
it's like account. They used the guise safe, right? of a stable coin to validate their unstable practices. And that's the whole reason it's a black mark on the entire crypto industry here.
You're right.
Because this is something where people have allowed them to get away with the fact that, like, this was supposed to be a stable practice. This is supposed to be where you're able to keep your money if you want Web3 to succeed.
Mm-hmm.
And like, it's arguably, in my eyes, like kind of criminal, what they went through with that, or how it was set up. So
I think that's like to your point, the UST part, I think, is what Do Kwon especially needs to address if he wants to avoid like serious lawsuits, because that's kind of where it's a little sketchy, because it was sort of advertised as like a stable, like savings account kind of asset
coin.
Yeah. So I think 30% of the total 1 billion token distribution. So it's going to be a 1 billion token supply now, the new Luna. 30% of it is going to UST holders, 10% pre-attack and 20% post-attack. Mm-hmm. So they're going to get money, but not as much as Luna holders are getting, which is a little bit interesting. So Luna holders are getting 45% of the 1 billion across, the different stages, post attack, and then UST holders are getting 30%.
Interesting.
The other thing is, like, I don't know what UST is trading at right now. Does anybody?
I think like
is it at zero yet? 10 cents?
Let's see. No, I said that because that's what. Yeah, 11 cents.
11 cents. Okay.
So 90% versus Luna dropped 100 basically.
Yeah, exactly.
Is that how they're figuring this out?
That's what I was gonna say. Is like if you had Luna at $100, you actually have nothing now. But if you had UST at $1, you still have 11 cents now. So maybe that's how they're doing it.
I think I saw somewhere Binance's Luna holding that was once worth like 1.6 billion is worth like 3K now, or something like that.
They took it off exchanges. I don't think you can swap it anymore.
Yeah, that would have been in the best big short of all time, honestly.
Yeah.
I mean, that's exactly what whoever the attacker did, right? Not only
Yeah.
did they short Luna, they shorted Bitcoin, right? Because they knew they were going to have to cash out the reserves. So,
Yeah,
I mean,
in hindsight, the more profitable trade is just shorting Luna because you like the mechanics of Luna, right? Like it because it will get arbed and it has no max supply. It's just a wrap. Like it's just, oh my gosh, crazy.
Yeah, I
Well,
was
Crazy.
listening to the Bankless podcast on Spotify, and they said that the attacker made off with $900 million, just pure profit off of that play. So
Wow.
yeah, not too bad.
That's
not bad at all.
not a bad day at the office.
Yeah, geez.
Speaking of UST, I would love to kind of get your take on this, because I know you were kind of involved in this whole piece. And so I pulled this. This is a graph from, once again, Invest Answers. He's on YouTube as well. But here's kind of this piece that he put, right? When the peg starts to drop off of some of these stable coins, he says, run, right? You just got to get out of there. And it's not just for UST. This has just kind of been the case in the past as well. And so you go through kind of these different levels, right? You can see in the green here, you have the peg watchers, the individuals who are like watching it. They see it just briefly drop off of the dollar and they're like, we're out of here.
Yep.
Then you have this group of decisive sellers where this thing spiked down hard and they know what's going to come of it. They know what the ecosystem looks like. They know how this is going to work. So they sell within this range. And then you have the reluctant sellers who hopefully, I like to think they would sell when it gets back up to here. And then you have this last phase of bag holders. And I think it's really tough, especially when you believe in a project so much, something that we all called like a blue chip, and everyone kind of in the space called a blue chip, right? It's like when you believe in a project so much, when you believe in the leaders so much, you want to hodl, you want to get emotional, you want to hold that bag because your thought process is this can still make it, this can still go up.
Right.
But so I want to get your take, because I know you were in it. Where would you kind of place yourself at here?
Yeah, I mean, so thankfully I ended up in the peg watchers, but I'll explain how that happened and why I made that decision and what factors kind of played into it. So the first thing is, going back to Armada, your initial presentation and when you talked about the difference between fiat backed stable coins versus algo stable coins, things of that nature, right? And so the fundamental thing is like, okay, I had money in Anchor and I understood like in order for them to, like, you have to look at the business model, right? For Anchor and for them to actually have like a profitable business, on the deposits, they need to be earning more lending out than they are paying out in the 20% APY. For the longest time, last year, when a ton of people were taking out a ton of leverage, that was true. Then this year, it kind of went in opposite. And so the rewards wallet, was depleting. These are all factors that, I was kind of watching. Secondly, the fact that it's an algorithmic stablecoin, right? Not actually backed by anything, but reliant on arbitrage traders to keep the peg. I had followed there's a few people on my Twitter feed. I don't remember exactly who, but months ago had kind of sounded alarm bells about this being more of a systemic risk to the broader crypto ecosystem if something terrible were to happen, right? And so, not saying that got me following the peg chart or anything, but it got me thinking like, okay, this is being advertised as like a riskless thing. It's definitely not riskless. Nothing in crypto is ever riskless. Even like what you think is the most like solid stable coin out there, whatever, it's not riskless. Everything in crypto has some level of risk, right? So you start trying to like pay attention, follow the right people, understand what's going on. Then in like I had kind of described in the last episode, one of the people that I follow, the guy, OX Hams had said, hey, flagging this, UST just broke peg slightly. At that point, it was 0.9975. So nothing crazy.
Right.
But when
That's
it
your
was,
peg watchers here.
but when you're following it, at least like, I guess, closer than most people, right? I wasn't actively watching the chart, but I happened to see this. That kind of said, oh, okay, hold on a second. Let's like kind of look at what's going on. The next thing you do is you say, okay, if a bank run scenario is happening, like what would actually happen? And the answer to that is there would actually be a bank run. And that's where you go to curve. Remember, last week I had pulled up the curve pool, and that's where you start seeing the imbalance happen. Imbalance basically means people are taking their UST and saying, screw this, I'm getting into another stable coin, right? And when you start seeing that, then all of it is just like, okay, it's human psychology, right? Once a bank run is underway, there's really nothing stopping it because it's just a feedback loop, and it's a negative feedback loop that just spirals out of control. And that's just all that happened. Now, the reason why I got out and I didn't even, like, let's say I'm like the most bullish person on Terra. The reason why I just sold it and went to a different stable coin was because it's all risk reward at that point, right? If you have Bitcoin or Ethereum, you have a certain level of risk and loss that you're willing to take in order to maybe benefit from colossal upside. Similarly, with like complete shit coins, similar thing, right? You have a huge risk tolerance because you could lose whatever you put in there. In fact, chances are high that you lose whatever you put in there. But on the off chance that it explodes, you're making multiple X's, right? In the case of Anchor, I knew based on studying the environment and understanding the project that if this goes to shit, it's done, right? It's over. Like if a bank run happens, this is like Armageddon. The best case scenario, if it doesn't, is I'm making 20% APY. So that risk to that reward just didn't add up in my head. And that's why I ended up just getting out. I definitely I didn't sell it at exactly peg. Like I think it was like 0.98 or something, but definitely in hindsight, better than, holding it through the Armageddon that occurred. So I don't know. That's kind of just my take.
You weren't in Luna. You were just in UST because you were swapping everything on Anchor and doing all that, right?
Yeah. I mean, I was in Luna in and out over the last year, but at this very moment, like when all this happened, I wasn't in Luna. I was in Anchor, just like chilling on stables, like just earning the 20%.
I mean, that's a fantastic point, right? I mean, it's sad because I feel like we were just talking about, right? UST is kind of almost proposed or like advertised as safe, stable, right? That's why it's literally in the name, stablecoin. And so it's just always good, like to kind of remind ourselves, right? This is still all the Wild West, especially like DeFi, right? It's still the Wild West. You still have to have and understand at what point do I sell this, right? Kind of like you said, right? That risk reward balance. And so, I think that's something that people have to get burned on a couple of times to start to learn from it. I've been burned, right? I know all of us on here have been burned. And it absolutely sucks. I mean, never want it to happen again. So it's just, we are working with risky assets. For a lot of people, right? It doesn't get more risky than this. So it's like, as much as we want to say, throw it into Anchor, you get 20%, never worried about it again. That's just simply not going to be the case in this space, at least for a little bit. So.
Yeah. And I think because, kind of what's happened with the last couple of weeks, we'll start to see regulators come in and, it's going to punish other coins in the space, whether it's a USDC, maybe Tether needs it. I don't know. But it's just like, they're going to come in, start regulating, and over the next few months, like we'll start to see, what happens. I know it was either today or yesterday, former chairman or chairwoman Yellen was testifying about the collapse of UST. So I think it's definitely on the watch of lawmakers and regulators, and in the next 6 months to year, we'll probably get some news around regulations that are needed. Whether you think they're needed or not, I don't know, up to your own opinion, but it's definitely going to be something new in the space, and it's going to shake up the Web3 community. So we'll just kind of see how that goes.
I thought this was an interesting chart from the this is also from the Andreessen Horowitz presentation. This is from the actual deck, but when you look at total money supply and compare like the global circulation of money versus like the stable coins, it's just, it seems so large when we're like talking about it, but in reality, it's just so minuscule. I just thought this was
back
like
to that zoom out. It's back to that zoom out.
Oh, no,
right?
but it is large. It is large. So in 2008, Lehman Brothers lost $80 billion worth of mortgage-backed securities, and that's how the 2008 crisis started. And when you look at Luna, I think Luna was the majority of this. There was probably about 12 billion in UST, but it comes to about 53 to 55 billion. So yeah, zoom out, but you start to see like how small of a domino compared to this stuff
You're
needs
right.
to fall for this stuff to happen.
No, you're completely right about that. It's always like a small ripple
Right.
in the market that just, it's a butterfly effect and it just hits so many different things. Yeah, it's interesting.
Well, yeah, those
Really
stable
interesting.
coins are used in a bunch of different projects. Like that's why we saw like an absolute like chain reaction with UST collapsing. So like a lot of those stable coins, like they may only represent, whatever it is, 1 billion in value, but they might be tied to $50 billion worth of assets that are being locked up with staking or APY incentives or whatever it is. So that when that goes down, it's crazy.
Yeah.
And it's funny that Ripple continues, right? Even to expand on that, right? I mean, L1 trade was huge for this bull run. I mean, those things were shooting up like crazy. After the Luna crash, all of those assets were down 30, 40%. Maybe they had something a little bit to do with Luna. Most of them probably didn't, right?
Mhm.
And so it's like, it's just interesting. You had kind of this like crypto contagion event where it's just like this bad thing happened, this pretty much black swan, I'd probably call it, right?
Mhm.
This black swan happened and it just spurred off onto everybody else, which is pretty interesting to see.
And it's the question of, are we like still pretty early in this ripple effect? Are we going to start to see more and more projects over the next couple months be affected that we didn't hear of originally, but kind of comes.
I certainly hope not.
Yeah.
Well,
we don't need any less trust in the space right now. The sentiment is not good.
Yeah, I mean, I was messaging you guys that day when Tether has, over the course of the last few years, has lost peg many times, but like not severely, and has always regained it, because there's just always a lot of like controversy around Tether, right? But if like that actually does happen at some point, that would be an extremely severe event, because Tether is way bigger than it's much more heavily used than UST was. The thing is with Tether is like they're fiat backed, right? So there's the questions around like, are they backed as much as they are like out, and like or however much has been printed and like things like that, but it doesn't have like that like Armageddon mechanism that like Luna had, right? Where there actually is nothing backing it besides for maybe some Bitcoin that was purchased like last minute, and like that's basically it, right? Like it's just an algorithm all based on arbitrators collecting small spreads on the arbitrage, right? So I don't know, we'll
not
see.
as much of that virtuous cycle goes on when there's some sort of backing there, which is why I think I was at least a little bit excited around Terra kind of buying into Bitcoin and using that as a backing, but obviously that backfired. But I think you bring up a great point, right? We have to watch these stable coins very closely. The regulators are watching them very closely. This was an article I saw on Reddit. Investors withdrew over $7 billion from Tether, raising fresh fears about the stablecoin's backing. I think you bring up a great point as well there. I think Soham, and I think Evan, you brought this up earlier. It's like, does Tether have the backing that they claim? Well, this is kind of like a negative facing article, right? It's like, oh, they withdrew 7 billion, like the space is so fearful, which is so true. But then if I actually pop over this Sam Bankman-Fried tweet here, I really, really agreed with this because it was the first thing I thought as well, right? It's almost like backwards, right? It proves that they did have at least some sort of reserves there ready to go to actually send out 7 billion, right? So in like a weird backwards way, it was almost kind of like a good news piece for Tether. And it's like, well, everything that you've been saying has been fun. We at least had something, right? There's proof that there's reserves to send back. But
yeah, I mean, when you look at it as a percentage, though, that's what kind of concerns me, right?
It's like a great point. Yeah,
83 billion to 76 billion is like not even a 10% run. But where a real bank run occurs is when half of that or more is getting redeemed in like a very short period of time, right? That's the real stress test. And everyone was waiting for the UST stress test and they clearly failed. So it's like when a stress test does occur, that's going to be like the real, question. But, we'll see. I think, time will tell. Hopefully they have the backing and it doesn't just melt the entire market.
Yeah. I mean, there's two trains of thought there, right? It's DPEG's terrible for crypto, right? Definitely terrible for sentiment. The other train of thought is DPEGs, and then everyone moves because, like you said, you kind of use this as like you're mediated between trading different assets. Everyone moves from Tether and pours it into something like Bitcoin, right, and sends that thing skyrocketing. So I think it would be bad. I think it would be bad in general, just because it would just cause even more of a ruckus in the space, and people would be super down about crypto and stable coins and everything like that. And then we'd probably turn to these central bank digital currencies that all these countries are starting to put out now. So definitely something to keep watch on, but tons of different scenarios that can come out of it. I'm just hoping that, at least for us, right, I'm hoping that that doesn't happen anytime soon. Maybe down the line, but
give us a little breather. Just give us a little breather.
I could see a lot of those stable coins, like especially the fringe stable coins throughout this bear market, like getting stress tested and failing. Like I think there was one, like not a very popular one, but DEI, I think was the ticker, or Day or something. I forgot what it was called, but
it's not DAI, right?
Not DAI. It's something else. It wasn't as popular, but I think like fringe stable
is that the
coins.
one by Deuce Finance?
Let's see here. Deuce Finance, is that really what it is?
Take us seriously.
Still doesn't beat Magic.
Phantom, Phantom stablecoin. Deuce Finance.
Yep. So it's a Phantom stablecoin. It went from like around the same time, a couple days after, it went from $1 down to 60 cents, and so it's been kind of holding there. But I could see a lot of, like, during the bear market, a lot of these kind of getting destroyed, and then kind of consolidation into a couple of really popular stable coins, just like a handful. Hopefully none that are like Luna, but at the same time,
Wow.
Yeah. It'll be interesting to see how Curve performs too. I think Curve is a super important part of the ecosystem, and if these stable coins start to get stress tested, it's going to make it only more difficult to be able to switch between like stables very easily, just with liquidity drying up or whatnot. So that's another one to watch. We'll see. We'll have to do a deep dive on Curve too as well. I know we've mentioned it in plenty of podcasts, but
oh, dude, I love Curve.
I feel like we haven't given it the time of day that it deserves. So
it's so deep.
Yeah,
Curve is a genius protocol. I'm definitely down to deep dive into there.
I mean, especially with like DeFi, I feel like, it was crazy big back in like November. I think I saw a chart. It was like trading volume for DeFi was like 110 or 115 or something billion back in November of 2021. And then more recently, it was something around 40 billion, right? I mean, that's basically like a 3x drop, right? And it's just like, where's everybody gone, right? What's going on? And it was just a steady decline over time. So I guess we'll see that come back, hopefully. And I would love to learn a little bit more about Curve, because I don't think DeFi is done. That's for sure.
No.
Just a little lapse here.
Right.
Definitely not.
All right. So should we last topic of the day to round it out? You know, one of the projects that we've covered on here before, StackOS, had a AMA last week. And, you know, I listened in on it. I thought it was pretty good. Evan might have some other thoughts, but for me, there were a few kind of like bullish updates. One, you know, they gave an update on you know, projects that had been deployed, and I think he said like 16,000 applications had been deployed using their you know, decentralized cloud, which is up like 15,000 or something in like the last 6 months. So definitely like a solid amount of utilization coming out of the project. Another thing, like 20%, their kind of like target market is like trying to bring you know, Web 2 companies into Web 3. And so he said 20% of the companies that have deployed with them are actually Web 2 companies. So that was awesome to see. And then lastly, you know, kind of in the spirit of survival and kind of the things that we've been talking about in the Web 3 space, given, you know, kind of the, you know, the downturn and stuff, you always want to see companies who are well capitalized, right? And so one of the most bullish updates, honestly, that I thought that you know, we got from the AMA was that the entire VC allocation of tokens has been given out. And I think he had said that before, but just so everyone knows. So there's not going to be any like, you know, the VCs already have all their token allocation. They could have dumped whenever they wanted. So there's going to be none of that. B, they're profitable. So currently the way things are going, they're a profitable company. And C, you know, they're not going to have to raise any more funds, and they still have all their VC capital that they've raised. And so, you know, Vishnu basically said, you know, market goes up, market goes down, we're going to keep building. And so, yeah, I personally thought that was great. I know there are, you know, a couple of question marks regarding the viability of like their competitive advantage. Ev, did you have any? I know you listened in for a little bit too. Like, what are your kind of you know, thoughts as more of a little bit more of a technical person who understands the space a little bit more?
Yeah. No, I think you covered a lot of the bullish stuff well too, and I think another bullish point that we saw was, you know, that you mentioned is that they've been building since 2016. So just to your point, they're going to keep building here. Yeah, I think some of the stuff that I've been most interested in, I feel like I'd love a little more clarity from the team, is just a roadmap around how they want to use AWS and GCP, basically their cloud providers' resources in the future. I think, you know, I know their tagline is they're the decentralized cloud, and they would love to bring Web 2 companies into Web 3. You know, I'm sure they've got test networks set up within their nodes. But, you know, my biggest question is, how decentralized are you if you're running exclusively on AWS and GCP? I mean, these are two cloud providers that basically the entire internet, you know, essentially runs off of, or, you know, high performance enterprise grade compute resources. And so, yeah, that was my biggest takeaway that I would love to hear from the team. I know the CEO mentioned that, you know, they've got plans for the community cluster operators to start, and I'd love some clarity around whether they're going to allow them to use their own local computing resources, or if they're requiring them to also use AWS or GCP. But yeah, I mean, that's kind of my thing is how decentralized are you if you're on AWS? If that works for their customers and they're able to provide competitive rates for their customers while basically, you know, offering the same computing that AWS does, that's totally fine. And, you know, that's a solid business. But yeah, I'd love to hear a little more clarity around why someone couldn't come into the space, you know, create their own test network, which we see is pretty common across a lot of decentralized blockchains. You know, you never want to test in production. You don't want to test on Ethereum, because if you're testing transactions, you're going to literally be sending money and wasting money. So you set up a test network to simulate those transactions. I'm sure they've done the same thing with their network. But when you get to the lowest level, it's still AWS, it's still GCP. And is that, you know, something that a competitor couldn't come in and easily, you know, use the same cloud computing resources to provide the same competitive advantage that they're offering to their customers? So yeah, that was my take on it. I don't know.
No, I think a lot of good points. Basically, the question is like, is there any benefit if, you know, if you want to deploy application, you can go to, so I think one of the things that they said is you can, you know, deploy it very quickly and you don't need to, you know, have a deployment engineer or like a cloud architect or something in order to deploy your application. And, you know, this apparently costs companies like a bunch of money. And, you know, that is like a huge cost saver from the client's point of view. Is that not really that common? Like, that's like, from your point of view, if you're somebody who wants to deploy an application, that's not really necessary even on AWS.
You know, like AWS already has one-click deployment. Their whole idea behind Lambdas are that they make it super easy for a web developer that doesn't understand cloud infrastructure, you know, memory management, that those type of like low-level operations, for a developer that doesn't understand that stuff well, to easily come in and run their own servers on their architecture. And so, yeah, I think they're kind of just using what's already given to them within AWS in terms of having a engineer that's able to, you know, basically maintain all this stuff. Yeah, they don't need that anymore because they're not operating their own data center. You know, users aren't using, or operators, node operators aren't using their own local resources, their own computer. They're just using AWS. So it's not that the reason they can do that is because they're just relying on Amazon to be able to operate all that decentralized architecture like maintenance work. So yeah, I mean, that's obviously a competitive place. Like, there's a reason that AWS makes so much money on it. The question is, can they lean on AWS and consider that their own competitive advantage to their customers, or is that just AWS's competitive advantage? You know,
Definitely. And then the other question is like, is there benefit? Because you said that it's AW, like currently it's spread out. I think he mentioned when you had asked the question in the AMA, he said currently their cluster providers are spread out over AWS and GCP. Is that right? Most predominantly. So then the next question is like, how much does a client gain from having exposure to two of those versus just one, right? Like, is that something that people are willing to, you know, pay up for? And then I'd also be curious, just like about their pricing strategy, honestly, like, you know, if they're able to provide an equal as good service for a fraction of the cost, and they're just like mainly like a low cost player that it's coming in like undercutting you know, the AWSs and GCPs of the world, that's a selling point in and of itself, right? But then the competitive advantage piece is like a totally different piece, right? It's like, are you doing the same thing and doing it way cheaper and more efficient possibly, or are you doing it just way better, right? And so that's kind of like, you know, the question. It
And
seems
I
like
think
the
that's
amount of
the biggest thing.
deployments, yeah, it seems like the amount of deployments has gone up significantly. So like it'd also be interesting to see kind of like examples of some. I know they have some examples on their website, but if they have that many deployments, I'd like to see like kind of some of the projects that
Case
are being
studies
deployed
and
there.
everything like that.
Yeah,
Yeah.
I'd be curious to see like what their, I don't know if Sam, you probably know more, but if they've talked about like what their target market long term is, because I know like from my understanding of like the cloud and infrastructure and all that kind of stuff, there's a big barrier to entry in terms of getting from an on-prem database into the cloud, like getting all your data from on-prem into the cloud. So if they have some way to like very cheaply implement that process for like small, medium-sized businesses, that could be big, because that like in terms of a cost savings would be huge. And if they have some sort of way to make it easy to do that, because that's the actual process that takes a little bit more manpower and a little bit more configuring, whereas like actually managing the cloud architecture, if it's already in there, that's more of like you're just kind of heat checking it once in a while. So it's like it's definitely like, to your point, if they're isolating like a specific pain point at a lower price and they don't necessarily need that competitive advantage at scale, like it could be, you know, an interesting little pocket they could play in. But
Right.
I think
Definitely
I
right.
would be most interested to kind of understand, like for me, I'm not really a trader, right? Like I'm more of an investor. I like to invest in something, hold it for a long period of time because I'm bullish on it and I believe in it in the long term. For me, I think where I'm struggling the most with Stack is what is, to Evan's point, like the competitive advantage here, like moving forward, like what's their end goal? Is the end goal to pull away from the AWSs and et cetera in the world and be that fully decentralized cloud that they're proposing? Or is the goal to kind of, can't really think of another term, like leech off of AWS and others to kind of provide that at a cheaper price and more efficient, right?
Right.
So I think that for me would be the one thing to kind of understand a bit more, is like, what does that vision look like and how do they plan to get to that piece?
Right.
For me,
Right.
No,
definitely.
I think there could be a middle ground there too. You know, I think you see a lot of these other decentralized networks. You know, Solana's very centralized. That's what they're able to.
Absolutely.
They're able to keep their speed up. I'm sure there's many other networks that rely on AWS to run nodes. So that's not to say that like that's not a great solution for part of your network. You're providing the best possible performance you can for your network for that percentage of nodes that you run on AWS. At the end of the day, it's just not decentralized, or at least not in my opinion. You know, maybe somebody's got a different opinion on what decentralized means. But yeah, so I think there could be a middle ground, but great point, Mata. I think we just need more clarity on where they're going.
and if there's a middle point, that's totally fine. But like,
Yeah.
it would just be great to know, right? I feel like it's a little bit ambiguous right now what the end goal is, and that's the only kind of sticking point that I have with it. I love the idea. I think it's super awesome. I'm actually bullish on that long term. I think I said this to you all. It's like bullish on the idea, whether that's Stack who ends up doing it or someone else, right? That ends up being the question there. But definitely a fantastic idea. It's just, I think it needs a little bit more kind of clarity on what that roadmap looks like down the road.
Agreed. Hopefully, I mean, it seems like they've taken the community's advice and are doing more regular AMAs, which is great to see. So
I love that. Yeah.
hopefully, yeah, just like providing that, you know, openness, getting to, you know, talk to the CEO, having the community there. It was good. And we can, you know, link the video as well for those of you who missed it. Is the AMA was run by a guy. He has a great YouTube channel, by the way, James Pelton.
Yeah.
So we'll give him a shout out. Thanks, James, for hosting that. But yeah, hopefully, you know, we can tune in next month or whenever the next AMA is. I think they had said they were going to do it monthly or something. So it'll be great. We can hopefully hop on and ask some of these questions, get some more clarity. But overall, I think that'll do it. Signing off for episode 12 with the fellas. As always, if you found any of this helpful or funny or useful, definitely hit the like and subscribe button down below and leave us some comments. We've been missing some comments lately, so we definitely want to chat with all the listeners and everything, and yeah, let us know your thoughts. Anyway, we'll be back same time, same place next week. Thank you all. Signing off. Wag me.
Adios.
Peace.